All right, Bulls and Bears, let's go back with another dose. Economic reality, bull to the bust, BX4 back in the building. Let's go ahead and get into the economic, financial news. The economy continues to implode. We're talking about the backbone of the U.S. economy. It really is the U.S. consumer the backbone anymore? Is that what drives the economy? Well, yes, but only because the banks are still loaning out money to the American people. If it wasn't for that, if it wasn't for the endless debt creation, this economy would have imploded a long, long time ago. The question has been, and still is, how much longer can the average U.S. consumer still keep going? And now we have a new administration coming in January. These debt forgiveness programs, student loan debt, etc., will they continue? Right? Will the down payment assistance programs continue? Will they keep dropping interest rates? Will there be a reversal now with the new administration and possibly raise interest rates, right? We'll have to see what happens, how it plays out. Here's what's happening here recently. The dollar just hit a 4-month peak. So we're seeing renewing strength in the dollar because of the new administration, because of the talks of a booming economy, or they're supposed to make it boom even more than it's been booming, if you want to call this booming. So what does that mean? They're going to keep rates low. They're going to keep probably the debt forgiveness on the table. We'll have to see how it goes. They're going to keep the down payment assistance programs in play, maybe even lower rates. Remember in 2019, the administration at that time put out there through tweets, etc., that we need to keep rates low, pressuring the central bank to keep rates low. So what are we going to see? More inflation. And it's going to be even worse, possibly because of the tariffs. We even have Janet Yellen out there saying tariffs are going to re-accelerate inflation, right? But not so fast, not so fast. I see some very big news coming out on the horizon. I told people to start being cautious starting in October. I haven't changed, folks. I'm still on the defensive mode, and we'll talk about that here in just a few minutes. But we got some pretty big news here. Layoffs, massive layoffs out of the media. CNN will axe top stars. Layoffs that'll see hundreds fired as ratings plummet. So the political environment right now for the left, not so good. And there's people being discussed here that might lose their jobs. It says proposal of being axed people like Anderson Cooper, Christopher Wallace, and other big named people. So media layoffs, folks, are continuing and getting worse. For that side, in this case, the left side here. Gold, the lowest price since September 20th. So we're coming up on about a 2-month low. And what did I say here? I said it went up a lot. It went up very quickly, very fast. And there was bound to be a pullback. So we were correct about that. Silver, as I predicted, would pull back. I told people not to chase the prices. Speaking of precious metals, I was talking to a good friend of mine about a week ago, and this individual is now having to sell a lot of his precious metals, and he doesn't want to. He has to sell because his back's against the wall right now. He is making a gain because he started buying silver about when I did, back at around $14.50, $15. So he's got some good gains, but his plan wasn't to sell. His plan was to not sell silver until it was in the hundreds of dollars, but he has to because his back is up against the wall right now financially. He's having a hard time making ends meet. He's been robbing Peter to pay Paul. He's even talking about the bankruptcies, the B word, bankruptcy. And I caution him against selling his metals, especially in bankruptcy. They're going to ask you what assets you have. I'm not an expert there, but from what I've read about it, you have to declare everything that you own. So unless he's going to be dishonest, he's going to have to disclose his precious metals. So what is he doing? He's selling a lot of them now. And he's still making some pretty good gains based on what he paid for them. But with the upside potential of metals, especially with this inflationary environment, I was urging him to try to think of a plan B instead of selling all his metals. Markets are starting to show caution. We have a red day today. Today was the 12th, November 12th. And folks, I see this euphoria wearing off when people realize that it's only more inflation that's going to keep the economy, quote unquote, growing. What does that mean? More lending, lower rates, more easy money, more programs, down payment assistance, etc., more handouts, more freebies, more help for people. People are going to think that economic growth is going to help them. It doesn't help you, folks. It'll help the top 10, 20, maybe even top 30%, but it doesn't help the average working person. It's going to make people even more desperate. Costs are going to go up, and people are going to have to start working 2, 3, 4 jobs. I mean, where does it end? You have to ask, what is the breaking point for the people right now? Take a look at this right here. Consumer credit delinquencies on the rise again as debt continues to surge. A Vantage Score report talks about the average credit score held at 702 for the 7th consecutive month. So people are exploding deeper into debt. And it's crazy town because now credit scores are staying at a 702 even though debt is exploding. So what does that tell you? That tells me that they're trying to keep the credit scores propped up so people can continue to borrow more money. Because if they let people's scores tank, and if people's scores went down based on how much debt they have, you'd have half the population in the 500s as far as their credit score, maybe in the 400s. If you actually based the credit score on the amount of debt people had, meaning more debt, the lower the score, and less debt, the higher the score. Now it's just the opposite. If you pay off all your loans, or if you don't need loans, you use cash, your credit score is going to be in the tank, folks, between probably 450 and 550 if you don't use credit, because you're looked at as an unknown risk. But it's kind of a scam, because then the more debt you take out, you're looked at as a better risk if you're still making your payments on time, and then your credit score goes up. So more debt, higher credit score, the way it looks if you have on-time payments. Of course, if you don't have on-time payments, that's another story. But it's interesting the way it works. It's almost like they want people to go into debt. All right, now I want to go back and revisit something I talked about recently. That was the reason why I didn't vote. Because, folks, to me, there's not much of a choice. Take a look at this. And we talked about this. Fed Chair Powell clearly tells Trump he's not leaving. What does that tell you? Who has the power? Who runs things, right? Is it the president or is it the central bank, right? The Fed chairman can't even be fired by the president. That tells you who runs things, right? So another reason, folks, why I'm really not too thrilled about the choices that we had to make back, last week. And, I don't see much changing. I hope so. I hope I'm wrong. But I see inflation getting worse. I see the cost of living exploding, price levels staying high. The only thing that's going to come in and change this, and I've said this numerous times, is a black swan. Right? There are some things that I see that can float in here very quickly and bring down the markets and bring down the entire economy. Folks, take a look at this. U.S. consumer debt rose to $5.1 trillion in the third quarter. We have debt among consumers annualized. It's about 3.28%. And actually, I've got a chart here I wanted to bring up here. Take a look at this here. We've got in the red the total amount of revolving debt. And we have the interest rate. And you see the average interest rate's been over 20% since about mid-2022. So over 2 years now. Folks, please let me know your thoughts down in comments. Do you see the new administration coming in, bringing down the cost of living? Not slowing inflation, not prices going up just more slowly. That's slowing inflation. I'm talking about falling prices, dropping cost of living, price levels coming down. Do you see that? I would be shocked if that were to occur. To me, if that occurs, that has to be coupled with a big scare situation like a black swan. The New York Fed survey finds broad improvement in economic sentiment as inflation expectations slide. So out of these surveys, just recently here, since the selection, we have a lot of people now expecting or thinking that inflation is coming down. But remember, inflation coming down doesn't help anybody. That just means prices are going up, but more slowly than before. We need deflation. So to these people that have a improved economic outlook, they understand that slowing inflation or lower inflation isn't going to help them. Prices are still going up more than wages for most people. But people think that's a good thing, right? Prices are rising more than my wages, but it's not as bad as before. Instead of prices doubling my wage, now they're only going up 25% more than my wage. You see what I'm saying here? So people aren't getting out from under this debt. cost of living is not going to improve unless something big drops to bring down this entire money system, folks. So that's what's happening. That's what I'm still bracing for. The news that comes out, that needs to come out, will bring everything to a halt. And I think we're going to see something come up here very, very soon. I don't think we have much longer. I know I've been saying this. I'm staying on the defensive. I'm putting my money where my mouth is. I'm staying out of the markets here. Unless I find something to go short on and try to make money on the downside, I think this whole thing is overvalued. And it's not just me. Look who we have coming out here recently. Larry Summers sounds the bell on inflation. Sounds the bell on inflation. He says, why are we cutting rates in an environment where the markets are near all-time highs, home price unaffordability, the all-time worst levels, record amounts of debt, yet we're cutting rates? Even Larry Summers knows something's not right with this picture, folks. So keep stacking, folks, everybody. Hope you like this report. Please let me know what you think about this down in comments. We'll be back for more news. Please make sure you're subscribed. Talk to everybody very soon. Keep stacking. Bye for now. Peace.